Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange. I'm your host, Remy Blaire, and we are coming to you live from the financial capital in the U.S., in New York City. We'll start the hour with the market briefing and live coverage of U.S. markets. For today's market briefing, we have Tai Wong, independent proprietary trader. And in the second half, we'll be joined by Pandl, head of research at Grayscale. Tai, happy Friday. Thank you so much for joining me. What a week it has been.
It's good to be here. It has been a really active week. I think next week's a bit of a barn burner as well, but always glad to be here.
Well, I think we should check in on the markets right now. On this Friday morning, we're seeing the Dow, Nasdaq, S&P 500 all higher by at least 0.5%. The Dow Jones Industrial Average up triple digits, nearly 300 points, or 0.7%. And looking at the Nasdaq Composite Index, it is higher as well this morning, up by 0.6%, seeing a gain of over 100 points. And last but not least, looking at the S&P 500, it is higher as well, up by 0.5%. So, first and foremost, Tai, let's start out with the Fed rate meeting coming up next week from September 17th to the 18th. Now, initially on the heels of this week's economic data, there are expectations of a 25 basis point rate cut, but coming into this morning, we've been hearing different news.
Yeah, I mean, what a sea change. So yesterday during the show, I was checking the odds, and the CME Fed Watch tool had 10 or 15% chance of a 50 basis point cut. And then this morning, you look at the bond market, and like, why is the bond market up so much? It turns out that in the afternoon yesterday, Nick Timiraos of the Wall Street Journal, who's now sort of considered by the market the favored source. The market thinks he's the Fed whisperer.
Yes.
In that somebody very high in the Fed whispers to Nick that we want to send this message, we want to set certain expectations. So whether that's true or not, it may well be. There have been folks like Nick in previous years who were considered sort of like the guru when they wrote something. People really paid attention, but Nick's that guy now. And his piece yesterday was a relatively long piece, and it quoted a lot of former Fed governors, because they're in a blackout period. The Fed can't say anything. But if they want to tweak, this is how I guess they would tweak it. This is what the market's thinking. And it was a very, very sort of dovish piece. Almost everybody quoted in it said that there's room for 50 basis points. It should be 50 basis points. And the one that really struck me was that she quoted former Kansas City Fed President Esther George. And if you're sort of a Fed geek like me and you pay attention to all of these folks, she was the most hawkish, or otherwise always low inflation, high interest rate member of the entire Federal Reserve. She was the most hawkish. She retired last year. And here's the quote from the
Let's take a look
article.
at that.
It says, for those reasons, George said she would find it hard to oppose a larger cut right now. You can make a very good case for 50 to say, just as we went quickly to raise rate above a neutral setting, we're now well above it, so we can take a couple bites at this apple. And that's a wow. That's from Esther George. It's not from somebody who was known to be a dove. So I think that the market is now, as a practical matter, almost 50-50 for a 50 basis point rate cut. And and I think that's part of the reason why the stock market is up, substantially. The bond markets are up. It's made the market really pretty comfortable, saying, "Whoa, could we see 50?" And it's got to make you think, because the source of this material. So let's wait for the end of the day, and then I think the market will recalibrate perhaps on Monday. But it went from what we call a 10 or 15 delta to, I think, maybe a 30-35 delta. Now, I still think that the Fed ought to start with 25, because the message they send with 50 is to say, we were late, and why didn't we cut in July? And I don't think that's a message they want to send. Do 25, give a dovish directive, and move on. I think it'll be just as good, because I think 50 gives there's some sorts of risks in it.
Well, Tai, you brought up a lot of key points there, and usually here in the U.S. ahead of a Fed rate decision, Fed rate meeting, the officials go through a blackout period where they're not supposed to comment or do any media interviews. So it's very interesting that we're having former Fed officials, Dudley as well as Esther George, as you mentioned, Tai, commenting, and their comments have been affecting markets, as you mentioned, because waking up this morning and seeing this price action in terms of futures, the FX markets, as well as yields, it made you wonder what happened, what changed,
Right.
because we didn't have any economic data releases
That's
overnight.
Right. That's exactly right. And you bring up a good point. Bill Dudley, who was the former New York Fed governor. New York Fed governor is very important. The New York Fed governor, the New York Fed president. So the governors always vote there, up to 7 of them, and there's a rotating 4 governors who vote. But the governor of the New York Fed, because they're so tied up to the financial markets, always votes. He's always a voter. And Bill Dudley there's a lot of respect for Bill Dudley, and Bill Dudley has been saying for a while that they should have cut in July, but it should be 50 basis points. So I think Nick did a really good job in terms of getting, really key people to speak. So it remains to be seen if if he's right, and if he is, I think his stock will will roof, because people will be following him around to see who he's talking to.
Yeah, and it's so interesting because Dudley was in Singapore speaking at the Bretton Woods Forum as he mentioned this, and for a blackout period you wouldn't expect to hear anything, but here we have former Fed officials speaking at conferences and speaking on record. So this is very, very interesting.
Exactly right.
Here.
He couldn't get anybody on. He couldn't get anybody on the Fed right now, but he's sure got a lot of folks who were recently on the Fed.
And earlier this week we were talking about Boeing, right? And here we are on Friday morning, and we're seeing shares of Boeing lower, but not down significantly. Boeing shares are off and have actually turned flat after opening on a lower note. So were you surprised by what you woke up to in terms of their strike?
So I was actually watching this late last night because I knew the machinists union was voting. I think there was a chance that they were going to strike, but I was stunned by the fact that 95% of the union voted to reject the offer, and the same amount of people basically voted to strike. That is an overwhelming majority. I mean, we're talking about 95%. That's like North Korean presidential, voting numbers, right? You don't get 95% voting for anything, which is kind of a little bit of a shock, in that this is something that the union bosses and union heads sort of agreed to. I mean, 4 years, 25% wage increase. That's pretty substantial. But I guess the undercurrent of this was they had been chafing under their previous agreement since 2014, where I think some people lost pensions, so they were looking for sort of, I hate to say payback, but they were looking for sort of compensation. And what they had started with is they wanted 4 years and a 40% wage increase, which is like sort of unheard of. I would love a 40% pay increase over the next 4 years. That would be quite lovely, actually. Thank you. But this, and it puts Boeing in a bit of a tough spot. I mean, the company is in as rough a situation as it has been in a long time.
Yes.
With sort of scandal after scandal. The new CEO would love to say, let's just put this behind us. We'll refocus on quality. Let's get the brand name back. Now you have to deal with this. And in terms of if you have the previous strike was 50 days, and the market figures that the hit to revenue per day of a strike is $100 million. So if you have a 50-day strike, you're getting into $5 billion of a hit to revenue. Now, that is a hit to current year's revenue because you're not building anything and you're not making deliveries. I'm not an accountant, and I don't know exactly how Boeing recognizes revenue, whether it is when they actually deliver a plane, but that revenue, I guess, doesn't disappear, but it gets pushed into perhaps fiscal 2025. I don't know what their fiscal calendar year is, but it gets pushed later. And this year's financial results are going to be worse, which means borrowing costs based just on that may go up for Boeing. Whatever they need to borrow. So it's not good news for Boeing. And I think the only reason that they aren't down more, they were down 2.5% earlier on the open. The reason they've come back is actually Nick Timiraeus in the Wall Street Journal story on 50 basis points of Fed cut.
And before we move away from Boeing, the timing of this is very interesting as well, because we have to keep in mind that we're heading into the final weeks of the U.S. presidential election. So depending on how long this Boeing strike goes on, it could edge closer to that key November 5th date as well.
Yeah, I think a couple more thoughts here. You bring up a good point in terms of, in terms of the calendar. When, a possible externality of this, if this union gets a lot closer to what they want, is you see other unions, well, those folks got 4 years and 35%, whatever it is. Well, we want something similar to that. And now you're going to get, perhaps a wage sort of spiral, like, well, they got it, well, we want it too. And next thing, do we get government workers who want, they're probably not going to get that kind of raise, but nevertheless, the unions are going to be rested. And what Jay Powell has said over and over again is inflation expectations remain stable and low and fixed. If you start to move those inflation expectations, and we had consumer confidence today, right? And confidence was up, and inflation expectations were down just a little bit, right? That's good. But if you get a wage spiral and those expectations of inflation for businesses become unmoored, then now you're walking into a little bit of dangerous territory. Now, I don't think it's going to matter for the meeting next week, but you'd be starting to see the beginnings of something that could be troublesome in terms of inflation and wages.
And you just mentioned next week, and we're here on Friday morning, and we're seeing the major U.S. stock averages higher after this week's volatility. We saw not just in the Dow, but S&P 500, NASDAQ. We are on track for gains so far. So keeping that in mind, when we look ahead to next week, as we mentioned, we have that Fed reserve rate decision, 2-day meeting starting on Tuesday, ending on Wednesday. We get Powell speaking, and of course we'll be paying attention to the economic projections. But in terms of economic data, we get retail sales next week, we get housing figures, and we have quadruple witching at the end of the week. So do you think we're heading into a week of more volatility?
I think it's pretty likely. Retail sales always important to get the sort of the pulse of the economy. I guess that's a coincident indicator, whereas employment is kind of a lagging indicator. If something goes bad, employers won't necessarily let go of folks until perhaps months later, because it's expensive to let people go and then eventually potentially to hire people. But you have retail sales, which shows you sort of what it was last month. Housing starts have been sort of up and down, but you can bet that if the Fed is really sort of fighting between 50 and 25, that they're going to be watching these indicators in the beginning of the week. Probably not Wednesday morning, but you can never rule it out. So I think it's going to be a very, very active week, because not only do we see whether it's 25 or 50 basis points, we see on the dot plot the projections of what the Fed members think is going to be unemployment for the end of the year, and how many cuts they have priced in for the rest of 2024. I think that'll be really important. So expect a very active week, perhaps more active than this week.
And of course, as we headed into 2024, there had been expectations of rate cuts, but we're here beginning of September, heading into that rate decision next week, and we might finally see some action from the Federal Reserve.
That's right.
So also, as we wrap up this week, I want to take a look at other markets as well. I want to look at precious metals, commodities, and the FX market. So we've been seeing a weaker dollar here, and that is as we're seeing rate expectations being amplified ahead of next week's Fed rate decision. But gold is also at new record highs as well. So tell us what's going on here.
What a week for precious metals. Gold really didn't have a trigger. It rallied to historic highs by itself, and it's rallying even further today. Now people are starting to bandy around. After we've been in a range without a new historic high for a few weeks, people are like, okay, maybe we've topped out a little bit, and now people are bandying around it. It's going to be 3,000. We're going back to 3,000. Now we probably get a little ahead of ourselves. This was platinum week this week, so and then also the gold dinner, I think was this week, or is it next week? But there's a fair amount of focus on gold, and there are strategists who are bank strategists who are looking for 2750 by next year, which it seems like you could easily see after what we saw this year, depending on how the rest of the economy goes. A great week for silver, and as well as for platinum. And then palladium actually had a great week. It's back over 1,000, and now, I hate to put the word renaissance and palladium together, because palladium was traded 3,000 on the day that Russia invaded Ukraine, and been trading above 2,000, and then dropped down to 850 in a big reversal. So, because it's used in carbon and ICE engines for normal gasoline cars, which will slowly decline in production. The outlook is clouded, but right now it had an amazing week, partly because one of the big North American palladium mines is cutting about half its production, because they are losing $300 or $400 an ounce right now for it to cost them to take it out of the ground to where they can sell it in the market. So they really just had to cut back on losses. So a great week for precious metals. The dollar is near sort of the bottom of its range. I don't think it will collapse, but we'll have to see how we settle out the rest of the day, and then early next week ahead of the Fed.
And of course, now that we've covered what we're seeing in commodities, I do want to briefly touch on Treasury. So interesting price action this week, and of course we're keeping an eye on the yield curve as well. So what do you expect heading into next week?
So we had a 10-year auction on Wednesday that actually went pretty well. And 10 years is the benchmark that's become the benchmark Treasury over the past probably decade and a half or so. But then we had a 30-year auction yesterday, and that tailed 1.4 basis points. What that means is the auction went off 1.4 basis points worse than where the on-the-run 30-year bond was trading at the time. For a 30-year bond, that's fairly noticeable, and the non-bank bidders were a little bit soft. So what this suggests is that at the long end of the curve, as we mentioned, we've talked about the curve disinverting in recent days. The long end of the curve, people are saying, well, you know what? Maybe we are, we have some concerns. The front end is dropping, and we're a little bit more worried about the long end now. And we need a little more risk premium to buy a 30-year bond. Okay. So, we'll watch the auctions as they came out, but that was suggestive, kind of a weak 30-year auction yesterday for sure.
Well, we'll keep an eye on what happens as we head into the weekend, Tai. But very quickly, I do want to take a look at what's moving the markets, and of course the major stock averages. So I think it's a good time to talk about the latest earnings reports as well as price action that we're seeing across the board, and especially in terms of leaders as well as laggards right now. So why don't we start out with NVIDIA? So that had a volatile week this week as well on the heels of their latest earnings recently. So what do you make of what we're seeing when it comes to the Mag 7 names, and in particular NVIDIA?
So NVIDIA, and let's bring up graphic 1, because I wanted to just take a look at some of the things that we've talked about. So that's NVIDIA on the NVIDIA chart on the left. They're both one-year charts. And then Broadcom, which we looked at last week, and we talked about earlier this week as well. So they both had a great week. NVIDIA arguably led the rally at the back end of this week, and it's been up. It looks terrible when it's on the lows, but looks really awesome on the highs. So a good week for both of them. And Broadcom's a great company. As JD mentioned last week, it had sort of earnings that were just on expectations, and the market freaked out, and you saw the gap lower, but it's been up every day ever since. So we look at the charts. It's been a good week for both of them, but the range seems to be narrowing, and I think whether it stays in a range or breaks out on either side may depend on what we see next week from the Fed. The short-term outlook, I think, is going to be sideways. I don't think we're quite ready to break out, but you can see that that the range has been narrowing for both of these names.
And I do want to focus on JP Morgan now. And in New York morning trade, we're seeing shares of JPM down by half a percentage point.
So we looked at banks, graphic 2 when we have a chance. We looked at Bank of America and JP Morgan, and here we are. JP Morgan had that big fall early in the week because they said net interest income is going to be down. Well, if we get a 50 basis point cut and people look like they're going to accelerate cuts, that NII, that income from interest expense is going to drop perhaps even a little bit more. And then, if I look at on the right, I actually have Boeing, and Boeing we've been looking at, and it's really quite remarkable where how well it's doing so far today. Let's see if it lasts, but I'm a little concerned right now at sort of 160. I'd like it closer down to that double bottom that you see on 120 on the right. Now, note this is a 5-year chart. The other charts have been a 1-year chart, but I wanted to take a step back to see the scale. I mean, I don't think you'll get to 120, but if we get a strike down or a little rout in that stock, there might be some value there, because I think it does, as the primary airplane maker for the United States, it's not going to collapse. So the short-term outlook for both of them for the next week, I think JP Morgan will hold the trend line, that upward sloping trend line that we see. And I think that Boeing could have some exciting days ahead of it, and it's probably not going to be on the upside.
And very quickly, Tai, before we get to the half-hour mark here, I do want to take a look at Bitcoin and ETH. So we're here right before the 11:30 hour in New York morning trade. We are seeing Bitcoin as well as ETH both higher on the session, up by over 1%. Bitcoin up right around the 58,480 level, while ETH is straddling the 2370 level. So what's going on here, especially after the recent sell-off?
So let's look at graphic number 3. The Bitcoin chart is actually an interesting one, and our next guest, Zach Pandl, will probably have much more interesting things to say and go much farther in depth than I will. But on the left is the Bitcoin chart. And what troubles me, and again, this is a 1-year chart, from sort of the middle of the year, or maybe sort of the July-ish area, no, a little bit earlier, maybe May, June, you're seeing on a chart lower highs and lower lows. So that's why you see that somewhat downward sloping channel, and sort of, at least sort of traders, short-term traders certainly, get a little concerned about a pattern like this, because lower highs and lower lows suggest that we've seen the highs, and this trend, this downward trend is going to continue. So I expect that to continue unless we get a big asset rally. Really, a couple of days ago, we looked at the Bitcoin chart as next to the S&P 500, and essentially Bitcoin trades like a risk asset. So this is the downward sloping trend. We may get a rally in it, but in a downward trend, sometimes you want to sell the rallies and then buy them back. Sell the rallies first and then buy them back on a dip. So that chart's a little troublesome. And then no need to bring it back up, but Ethereum, which had a grand move rally earlier this year because of the ETFs, has really given back a lot of those gains, and it looks a little soft. Doesn't have a lot of energy. So I think we're not going to see as much action in Ethereum. It's still going to be Bitcoin.
And we're coming off the presidential debate here between the candidates, Harris and Trump, and we did not get any mention of crypto. And this is something that we briefly touched upon on the day right after the debate, that there was no mention of crypto. And of course, crypto community, they had been expecting some sort of comment, or at least hoping for that. So it's been very interesting to track the price action. And the thing is, you touched on this as well, it is a 24-hour market for crypto. So that is something that we can keep our eyes on as we head into the weekend.
You can always, if you're a market junkie, you can always watch that 24/7. And sometimes I do, just to see. Sometimes if you get a big move, and that sort of the end of at odd times, it may be liquidity driven, but it may tip you off that something important is happening.
And we have seen instances where there are market moving events on the weekend, so that is a very interesting sector to keep our eyes on. And our next guest, of course, will be joining us. So Tai, it was such a pleasure having you on. every day this week and to be able to talk to you as the market opened and unfolded. So have a great weekend.
Thank you so much. You too.
Thank you, Tai. That was Tai Wong, proprietary trader, for an extensive look at the markets. And coming up, joining us on Global Money Talk is Zach Pandl, head of research at Grayscale. We'll be right back. Don't go away. Well, welcome back to Global Money Talk, live from the New York Stock Exchange. Investors are still debating how big the Federal Reserve's interest rate cut will be next week. The central bank officials will be meeting next week starting on the 17th with the rate decision expected on Wednesday afternoon at 2 p.m. Eastern Time. We'll, of course, be keeping an eye on economic projections as well as comments out from Fed Chair Jerome Powell. Now, this week we got mixed data on Thursday, including a slight rise in U.S. producer prices and an increase in unemployment benefit applications, only adding to uncertainty. Well, joining me here at the New York Stock Exchange today is Zach Pandl, head of research at Grayscale. Zach, great to have you here. Thank you so much for joining me.
It is my great pleasure to be with you today. Thank you.
Well, we're here on a Friday morning and only hours until the end of the trading session, at least for the U.S. equity markets, and we've seen so much volatility. But of course, all eyes are on the Fed Reserve meeting taking place next week. A lot of anticipation, especially given that there are expectations for rate cuts this year heading into 2024. So first and foremost, what do you expect to see next week?
Absolutely. Well, you know, Bitcoin trades 24/7, so our markets, crypto markets, will be looking ahead to this event even over the weekend. Look, this is a long anticipated first rate cut, long time coming. The Federal Reserve started to signal an intention to lower rates really late last year, late 2023, and only now they're getting around to delivering it. My own guess is that they will go by 25 basis points as a first step. You know, I think the economy looks okay. Growth is definitely slowing down. Inflation has come down yet, but there's no reason for the Federal Reserve to panic. You've seen some debate in the last couple of days about a 50 basis point move. Yes. Look, it's possible, but the Federal Reserve typically does not deliver big surprises to markets right at the day of the meeting. I think 25 basis points and a strong signal from Jay Powell that more rate cuts are coming is the most likely outcome. That should be pretty positive for things that compete with the US dollar like Bitcoin, but I'm sure we'll come to that.
Absolutely, and it's really interesting because if we think about what happened overnight coming into this morning's session, we saw that expectations for a bigger rate cut, meaning more than 25 basis points cut from the Federal Reserve, had escalated in terms of the percentage expecting a bigger rate cut. Of course, we're waiting until the Fed decision day, but also to keep in mind is the fact that 2024 is a U.S. presidential election year, and this week we're paying attention to what both candidates, Harris as well as Trump, had to say. And I think a lot of people in the crypto community, they're waiting to hear whether or not either candidate would touch on crypto, but we didn't quite get that, did we?
No, the debate was very interesting this past week, and of course many important public policy issues were discussed. But I think the crypto community was probably a little disappointed that you didn't hear anything about Bitcoin or the crypto asset class specifically. Maybe that's not too surprising. There's so many things to talk about. Sure. But even beyond that, we would have loved to hear a little bit more clarity about what each candidate plans to do about the economy, about inflation, about fiscal policy and the deficits, about the movement of capital overseas, regulation. All of these things that affect the U.S. economy can affect the U.S. dollar, and therefore they can affect assets that compete with the U.S. dollar like Bitcoin. So maybe a little bit less on crypto, a little bit less on the macroeconomic policy plans of both candidates than maybe we would have hoped, but that's okay. I still think the election is a really big moment for our asset class, crypto investors, eager to see which way it goes. And I think either way, whether Donald Trump wins or Kamala Harris wins, the White House, either way, it's going to mean something for our asset class and help us grow over the coming years.
And you bring up a very important point, because I think Americans across the nation, they want to hear more when it comes to policy, because it is going to affect them. And there are voters out there who are still trying to decide, are they going to cast their vote for Trump or for Harris? So that is something to watch. And taking a step back to the summer, it was very, very eventful, and I think when we saw certain market moving events before the Monday open, we saw a lot of movement when it comes to crypto. For example, when we take a step back and we look at the attempted assassination of Donald Trump, we saw that move in Bitcoin and that reaction. So for viewers out there who may not be familiar, can you walk us through why it's a 24-hour market,
Absolutely.
What it means, and what viewers out there can glean from this?
Great question. I'd love to touch on that. The crypto market is based on a particular type of technology called the blockchain.
Yes.
And this technology allows us to make financial transactions any time of the day, even when banks are closed, on the weekends, and these transactions settle more or less instantly.
Sure.
They don't take T+2 or now T+1 like transactions around here. They settle instantly, and they can happen anywhere in the globe. They're the same experience, whether you're transacting with someone in the United States at the New York Stock Exchange, or whether you're transacting between someone in Korea and the United States. It all works on the internet, and so the system functions regardless of those same parameters that we're used to in the traditional financial system. So that's one of the reasons that somebody like myself, a financial markets economist, is so excited about the crypto or blockchain asset class. You learn about how the traditional financial system works, and this alternative structure, I think, is a more modern approach that better suits us for the sort of needs that we're going to have for our financial system in the future. Now, what does this mean for people today? I think what it means for people today is that, yes, things like this, events that happen on the weekends, for example, or things that happen overnight, are things, we can use the crypto market to exchange risk, hedge our portfolios, express positions, even when the traditional market is closed. So that's one reason why it's relevant for people today. But I think investors, consumers are going to get more and more exposure to the crypto blockchain space over time, and I'm very excited to see that play out as people learn about the asset class.
And here in the U.S., of course, we're paying attention to politics in D.C. when it comes to the presidential election. But of course, our eyes are also on Congress. And when we take a step back to earlier this week, there was a hearing on Congress on DeFi. So what did you make of that gathering?
Well, first, it is terrific to see these important issues get debated in a formal way in Congress. And In general, of course, there are left and there are right issues, but in general, I would argue we have seen a mostly bipartisan approach to the industry in Congress especially, and we'll see how this shakes out at the presidential level. But certainly in Congress, it's been a bipartisan focus on the digital assets, the industry, crypto, blockchain, all of the same type of thing. So, DeFi is a really central use case of these technologies. There's other technologies, identity solutions or stable coins, tokenization, lots of different things that we're doing with these technologies. But decentralized finance or DeFi is a really core innovation. We have a ways to go before this becomes ubiquitous in the financial system, but I think it really is a clear use case, and people should take a look at it themselves. If you're uncertain about what these things are, whether they're worth investing in them, it's very easy for the average person to begin interacting with these tools, test them out, and just see what they offer you compared to the traditional financial system. My own belief is that anybody that tries these things is going to get excited about investing in the technology. And let me say one last thing. If investors are interested in decentralized finance, stable coins, tokenization, all of these types of things, the most straightforward way to express that in a portfolio is being long Ethereum. Ethereum is the leading smart contract blockchain. It's available as an ETF to U.S. investors, available in other ways outside the United States. But really investing in Ethereum is the way to get exposure to this theme of smart contract blockchains in a portfolio today.
And since you brought up ETH and Ethereum, I do want to zoom in on the launch of spot Bitcoin ETFs and spot ETH ETFs. So coming into this year, as you mentioned, there were so many expectations when it came to Fed rate cuts. But coming into the month of January, here on the floor of the New York Stock Exchange, we saw history being made with the launch of spot Bitcoin ETFs, and I remember being here covering that, and of course it didn't happen overnight, and neither did the launch of spot ETH ETFs. But let's start out with what we're seeing in terms of spot Bitcoin ETFs, and if you're paying close attention here, there's been concern about some of the flows recently. So first and foremost, what do you make, looking back to the beginning of this year, of what we saw with Bitcoin ETFs?
Well, great question. Of course, for Grayscale, this was a monumental occasion. Grayscale has been operating in this space for 11 years. The Grayscale Bitcoin Trust is an 11-year-old product and has always been trying to find the best possible way to give U.S. investors access to these products within the regulatory perimeter of the United States. And there's nothing easy about operating in this space. To get these ETFs listed required a lawsuit from Grayscale against the SEC that we won, and that was what allowed us to bring these products to market. So really a triumph of all the things that the team at Grayscale has been working on for many years. So of course a big moment for us. For Bitcoin, it's another milestone in its move from an obscure asset to the center of the global financial system here at the New York Stock Exchange. We had the first exchanges, the first derivative products, the first loans that were made against Bitcoin collateral. All of these things were steps along that process, and the ETFs were just another big step. And I think there will be many more steps along these lines as we go forward. Now, what have they meant for the market? They have given investors much broader access, a broader range of investors access to these products. And investors that never would have considered looking at crypto, now they can get safe, regulated, low-cost exposure to these products in a portfolio. So it just offered access to all those investors and had a big effect on price. A very successful launch earlier this year. So we've been, of course, delighted to see that and think there will be more innovations over time.
And I do agree with you. It does speak to the institutional adoption of this space. But when it comes to ETH ETFs, of course, the use case is different, and some people might highlight the pros and cons. But as someone who's in the research space, can you walk us through this?
Yes. I have a unique perspective, I think, on this topic. Really, myself and our team at Grayscale are on the front lines of introducing the average American investor, financial professional, financial advisor to Ethereum for the first time. And I can tell you that while these products have had a slower start compared to the explosive demand that we saw for Bitcoin in January, really that is because investors are just beginning the education process. There are a lot of people that have spent a decade looking at crypto, and they're familiar with a lot of the terminology. But I can tell you, being on the front lines, most investors, the vast majority of mainstream investors, have never heard of a smart contract. They don't know what decentralized finance is. They've never used a decentralized application. And they're only just starting to hear about terms like stablecoins or prediction markets like Polymarket. And so our job at Grayscale Research is to help anyone confidently invest in this asset class. So we go out in the world, speak to retail investors, institutional investors, and talk about Ethereum, show them how to use these tools, explain the investment use case. I am very, very confident that education process is going to lead to a wave of demand for these ETFs. I think that not everyone has this same perspective as I do, but I'm fortunate enough to have these conversations every day with investors, and I think you will see a lot of success with these products over time as that education process plays out.
And I think education is so important when it comes to crypto, and we've been focused on what's happening stateside, but of course we're also paying attention to what's happening around the globe, whether we're talking about Europe, Asia, the Middle East, or other areas. So when it comes to the regulatory frameworks that you're paying attention to, do you think any of them could be a blueprint for the US?
Yeah, I'm sure we will get to that. Crypto is a global asset. Just like the internet, it goes everywhere, and there are no borders, there's no permissions required to interact with these applications. That is what's so exciting about crypto. From a regulatory standpoint, that raises new questions. It means that around the world, regulators are going to need to address the crypto asset class in a uniform way, similar to the way that we have banking regulation that is agreed upon, cooperated at an international level, and the internet is monitored in much the same way. We will get to that point at crypto. But regulators in different countries are moving at different speeds. As you say, Asia, Europe, Canada, the United States may be a little bit further behind than some of our peers, but we're getting there. The Ethereum ETFs, the Bitcoin ETFs are a great step in that direction, and we'll see with what we get with the election. We're hopeful that, again, bipartisan consensus in Congress will give us legislation in the next Congress. That remains to be seen, but I think given the trends that we're seeing, that's a reasonable expectation, that we will get comprehensive crypto legislation in the not too distant future here in the US.
And although we're talking about the future, sometimes I feel as though hindsight is 20/20. So I do want to touch upon lessons learned. So here we are after Labor Day, everyone's back. There are a lot of global events happening when it comes to crypto. And of course, we're paying attention to what's coming out of those events. But we are heading into the US presidential election, and we're awaiting Fed rate decisions, and there are expectations of bigger cuts. But of course, we had the Bitcoin halving earlier this year, and we saw progress in terms of legislation, the launch of spot Bitcoin ETFs, ETH ETFs here. But when we take a step back to 2022, we think about some of the sentiment that was out there even last year, and we saw that reflected in a lot of the crypto majors. So, Zach, can you tell us about some of the lessons learned from the most recent down cycle?
Yeah, absolutely. And I would like to just stress that the lessons learned in the last crypto kind of boom and bust cycle in most cases are the same lessons that you learn when you study financial markets throughout history. I started my career at Lehman Brothers, for example, and when a levered financial institution, whether it's a bank or a financial investment bank or a trading house, becomes over leveraged and exposed to its assets, that can introduce risk. So institutional leverage and the risk that that creates, I think, is one of the lessons. But again, that is common with other financial markets. I would say the other one, which is an old lesson, is just buy low, sell high, or as the saying goes, buy at the sound of cannons and sell at the sound of trumpets. We had a big crypto down cycle. We had a big drawdown assets. That proved to be an excellent time for investors to get long this asset class, to get involved in this asset class. So it is an asset class that has cycles. Investors have been repeatedly rewarded for investing in the asset class after these big drawdowns. And so if you're a more value-conscious investor thinking about getting in good entry points for your allocations, think about those times. If we get concerned about the asset class, if we see a big drawdown, maybe that's the time to begin allocating to crypto to give you the best chance of getting compelling total returns in the longer run.
And you touched on education earlier, so when it comes to the health or, say, fitness of this, what do you think needs to happen? What do investors, potential investors, need to be aware of?
Yep. The products are ready. U.S. investors have access to regulated, safe, cheap, liquid Bitcoin and Ethereum exposures in their in an ETF structure that fit in any brokerage account. So I don't think that there's a need for investors to do any more homework than that in terms of the product structure. With allocated to any asset class, just understanding the asset, what it's correlated to, how volatile it is, what's the right amount I should have in my portfolio. So ask yourself the same questions that you would have with any other asset class. And once you get comfortable with that, and please use Grayscale Research as a resource if you need to get comfortable with that, the products are ready for U.S. investors. And I really think that any investor can benefit from having a modest amount of these assets in their portfolio today.
And Zach, as we are approaching the 11:45 point in our segment today, I do want to note very quickly that we are seeing Bitcoin higher by 3% and is edging closer to that 59,450 level, while ETH is advancing by over 3% and is higher at 2397. But doing a deep dive into the differences between Bitcoin and ETH, in terms of Bitcoin, we've been hearing about mining because there's limited supply. And when it comes to ETH, that's a different crypto major. So can you highlight some of the differences and some of the use cases?
Correct. When investors look at allocating to stocks, they think of different market segments. You have financials, industrials, energy stocks. These are all stocks, but the public companies in those categories have different business lines and have different economic exposure. So we think of them as in different industries. When investors are approaching the crypto asset class or the blockchain space, we would encourage them to take exactly the same approach. Think about all the different assets and their different use cases and what kind of categories we should put them in. So we have a framework that we developed with FTSE Russell, the index provider, the Russell 2000 that many of your listeners will be familiar with. We developed a framework that we call the Grayscale Crypto Sectors, which divides the crypto asset class into these segments, just like you find in equity markets where we have, say, financials and energy. In crypto, we have different segments. Bitcoin would be in the currencies crypto sector, and Ethereum in the smart contract platforms crypto sector. So these are the two biggest assets in our space, and they're both blockchains, but they have different use cases and should be thought of as quite different. What are those key differences? Bitcoin is essentially a digital alternative to gold. You mentioned mining. It is a very highly secure, decentralized network, and Bitcoin, the asset, can be thought of as just as secure as physical gold in our view. So investors that want that type of exposure in their portfolio, Bitcoin is a great way to begin. Ethereum is doing something differently. Also highly secure, decentralized blockchain network, also a very solid asset that is scarce digital asset. But Bitcoin is doing something, Ethereum is doing something different. It's a platform for applications. What are these types of applications? Your listeners in Korea and here in the U.S. are just getting exposed to these things. What a good example is something like Poly Market, a prediction market that is getting more and more attention for giving us the predicted odds of who will win the presidential debates, who will win the presidential election. That application lives in the Ethereum ecosystem. So consumers are just getting exposed to these types of applications, and that's what Ethereum does. It's a platform for a new type of web application that we think will become in much more widespread use. Investors should look at having both of these things in their portfolios. We often see investors say have a 5% allocation to the crypto asset class, which can be, say, 4 parts Ethereum, 4 parts Bitcoin, 1 part Ethereum. That's a very common exposure for our clients.
And for investors out there who are thinking, should I invest in crypto? Should I buy directly versus an ETF? What are the differences there? Yeah.
So investors look at their portfolio. They typically put things in big buckets, classic 60-40 portfolio, stocks and bonds. Many more sophisticated investors will also think about an alternatives bucket, which may include private equity or venture capital or real estate or commodities. Crypto fits naturally in that alternatives bucket. It's an alternative asset class, has a low correlation to stocks and bonds, and so can be a great diversifier for your portfolio. For the vast majority of investors, the ETF products are going to be a great way to begin. Grayscale also offers private placement vehicles as well as other private vehicles. For investors that are a little bit more sophisticated in crypto, those can be a great option. But the Bitcoin and Ethereum ETFs, a great place to start. And they just make everything simple. Custody, taxes, cost, trading liquidity, all of these things are sorted out with the ETFs. Owning your own Ethereum, owning your own Bitcoin is an important part of what crypto is all about. I certainly do both things, have exposure through the ETF and some other exposures to Bitcoin and Ethereum when I'm using these networks in particular. But for the average investor, building a portfolio, thinking about their portfolio as a whole, thinking about the taxes and all the other accounts that they're using, start with the ETFs.
And I'm glad that you brought up taxes, right? Because that is something of a concern. And we all know that when it comes around to tax season, if we have sold stock, then we know that there are capital gains. But what about for the crypto space? What's going on there, especially here in the U.S.?
The same tax rules apply for crypto. I know nobody likes paying taxes, but it is important to follow the rules. And you have to pay capital gains taxes with the gains on crypto assets in the same way that you would for any other asset. This is just one more reason why the ETFs make everything so much more simple. I hold the ETFs in diversified accounts that have other ETFs, individual securities, etc., and all my taxes are done in the same way, in a consolidated manner, just like everything else. So it makes life very easy. Now, again, we've had gains in crypto this year, so that may mean realized gains can be taxable, but it is important to hold them in these brokerage accounts in that way, so that you can look at your tax liabilities in the context of all your assets, just like anything else.
Well, none of us like paying taxes, but it is a fact of life.
And it is a fact of life.
Indeed, we are also hearing from the presidential candidates when it comes to corporate taxes as well as other taxes as well. But one thing I do want to ask you is legislation. So we've seen some progress in terms of legislation here, but as we head into November, of course, we'll see what happens in terms of the election. But as we head into next year, we'll be keeping an eye on what happens in terms of Congress and the implications. So can you walk us through what we can expect when it comes to next steps?
Absolutely. So I think the first thing to keep an eye on is who wins the Senate, and therefore who is the leading party for things like the Senate Banking Committee. A lot of legislation is going to kind of emanate from that committee in particular. If the Republicans control the Senate, you'll have a Republican chairman of the Senate Bank Committee. You may build a crypto subcommittee, and legislation ideas may start coming out of that area. If it's the Democrats, we may see a different mix of legislation. What I think that there is most bipartisan agreement on and most bipartisan energy on is stablecoin legislation. And that's because it is the thing that is most closely related to the dollar and banking payment system that we're used to today, something that is very important for retail customers, for banks to sort out stablecoin legislation. So I think that that's where it will begin. We hope that we see more than that, comprehensive legislation around the industry. We have sorted out a lot of issues this year. The status of Bitcoin and Ethereum. It's great to see these products in ETF structures, but there are many more assets in our space, really just pieces of software that need their regulatory status clarified so that investors can approach them in the same way that they do other assets. We have that for Bitcoin and Ethereum now. We're waiting on some other things. But our own expectation is that stablecoin legislation is the very natural place to start. I think we'll find a lot of bipartisan support for that the next Congress, regardless of who occupies the White House.
And Zach, for our viewers out there who might not be familiar with stablecoins, tell us a little bit more about stablecoins and also in terms of what the landscape looks like here in the U.S.
That's right. I think to understand stablecoins, you need to just think for a moment about how a payment works today. If I want to pay you $1, really what happens is that there's a debit made from my account at some bank, and it goes through a process of a multi-day process of settlement with your bank, and you get a credit in your account. So our payment system today works as credits and debits with a bank-based digital money system. In the future, that's not how it's going to work in our perspective. Instead, you will have a wallet, I will have a wallet, and I will send a tokenized version of cash directly to you. That's what a stablecoin is. It's just a tokenized version of cash, but it allows us to make peer-to-peer payments in a digital format, just like with physical cash, without using the banking system. So I think a really exciting piece of technology that's going to lower cost, create more convenience, especially for things that are cross-border. It's going to make life a lot easier for the average consumer. But it does have big implications if you are taking these deposits out of the banking system. What does that mean for banks, for example? Are there intermediaries in the cross-border payment system, money order systems and things that could be affected by stablecoins? I think this is a great technology. It's a piece of technological disruption that's going to benefit consumers, but there are some of these questions that need to be resolved, and that's why regulators ought to take a look at it. But that's how the average person should think about it. We're going to get away from a bank-based digital money system to a peer-to-peer digital money system, and hopefully reduce a lot of costs, create a lot of benefits for consumers through that technology. Stablecoin is really a great example of the type of innovation that blockchain technology brings to the world and that people are using today.
Well, now that we've covered what we're seeing in the market in terms of the crypto majors, the launch of the spot Bitcoin ETFs, and also covered some regulatory things that we're watching, I do want to ask you about innovation. So I'm sure as the head of research, you're paying attention to some exciting innovations out there. So what really excites you the most when it comes to disruption in tech?
Yes. There are so many things happening in crypto that, although it's my full-time job, it's even hard for me to keep up sometimes with the pace of innovation. But I would highlight one area in particular that Grayscale has been focused a lot on that I think is a big new area, and that is decentralized AI, artificial intelligence technology. I don't know about you, but I am using these AI tools all day long for my work. I'm really blown away by the technology. But I think anybody that's using these tools regularly can start to understand some of the challenges, some of the risks that they bring, especially risks that relate to centralization. These models are controlled by small groups at large companies, and they may not be accessible to everyone around the world, and development may remain relatively closed. Blockchains brought this type of innovation, decentralization, permissionless innovation to money with Bitcoin, to applications with Ethereum, and we think can bring the same technology to artificial intelligence technology. So we released a decentralized AI fund for accredited investors, a private placement fund that investors interested in that topic can begin to get access to. But that is really probably the hottest area in crypto at the moment, and where some of the most exciting projects are. And we think at Grayscale we have really been leading the charge as usual, giving American investors access to those products in safe and regulated vehicles.
Well, I'm glad you touched on artificial intelligence, because we know that the market, the broader market, investors, retail investors, institutional investors have been paying attention to AI, and that has driven a lot of the rally this year. But of course, we're seeing that market volatility play into that AI bet, at least for the equity markets. So very quickly, before I let you go, we got the launch of Apple's latest products, as well as expectations for Apple's AI as well, but we know that they're going to be facing regulatory challenges when it comes to Europe as well as China. So when it comes to AI and crypto, are you concerned about regulation?
To a degree, I suppose. Look, I think the technology is groundbreaking, just like public blockchains and Bitcoin, this, which is something truly different and groundbreaking. Some of these new, the AI chatbot, large language models are really groundbreaking, and I think we will figure out the regulation. But what decentralized AI can bring, what crypto can bring to this, is a sort of rules of the road that provide open access and a lot more transparency than what we have today. Really, the transparency that you get from open architecture systems or open source software. That's what crypto can bring to AI. So it's a big topic, really exciting technology. We believe that you're going to see an open AI, decentralized AI innovation driven by blockchain technology over the coming years that'll complement some of these closed source models.
Well, Zach, I appreciate your time today. Thank you so much for joining me. There are so many moving parts when it comes to crypto, so thank you so much for simplifying not just the products, the technology, but also the regulatory landscape as well.
It's my great pleasure. Thank you for having me.
Thank you so much. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SamPro TV. Every day you can watch us from 11 a.m. until noon Eastern Time. And you can also check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for all of our viewers out there for joining us. We'll see you back bright and early on Monday morning. Have a great day and, of course, have a great weekend.